thank you so much for doing this. I'll just start off with a kind of a big picture global question. Obviously, the pandemic has been an absolutely extraordinary event. There was this, all economies have seen a sharp shrinkage in GDP in the 3 months after the pandemic in the US. India has also suffered a very sharp fall in GDP. On the other hand, you see the extraordinary buoyancy in the stock markets, particularly in the US, where the rout in February and March has been completely wiped off. There's been an extraordinary rise in stock markets, of course, dominated by the big five, but nonetheless, a very steep rise in stock markets. There seems to be some green shoots of recovery around the world, mostly in China, led by China, extraordinary enough, given that the whole thing began there. So how do you see the big picture in the global economy, the US, China? How do you see things panning out?
We're delighted to be here and join all of you. So thanks so much for the invitation. It's clearly been a pretty, extraordinary last, 6 months or so. And the first observation I think I'd make is to make sure we all recognize the power of uncertainty, our inability to predict. And I think had we had this conversation with me or many others back in the spring, I doubt we would have foreseen all that's happened to date. So it always reminds me of the hesitancy to now think we somehow hold the keys to be able to predict much. I'd say that the pandemic has played out in very different ways in different parts around the world, both in terms of the healthcare response as well as the economic response. I think you could say in the US, we've had a rather poor healthcare response, but we've had a pretty extraordinary fiscal and monetary policy response, which I think speaks to some of your question around kind of what's happened with markets. In some ways, India's had a little bit the other. It had a pretty stringent healthcare policy response, I think largely to kind of get the healthcare system prepared. And so while numbers have obviously risen dramatically since then and grown, what hasn't happened is that the healthcare system hasn't toppled in some way, that the capacity was built, supplies were available. And so India is now able to manage through that. And it did so with, I would say, some, especially around rural income support, but more limited policy response, essentially letting the recovery itself lead economic recovery. And I think, that's worked in an Indian context. China obviously had a very different one, where obviously it had a complicated month in January around its original recognition of events. But then its responses have been quite extraordinary. So I think each place around the world has had a sort of different combination of healthcare response and sort of policy response. I do think underneath all of it, what's harder to sort out these days is it clearly has created or exacerbated some of the gaps, splits, if you will, in society around income, around digital divides, around countries that will be able to borrow in their own currencies and those can't. I think one of the other ones has been sort of a smallness, bigness, in my view. And I think if you looked at the damage, I think a lot of it has been to the smaller, more disaffected parts of each country you look at, whereas the more resilient and robust players in markets, especially as you alluded to in sort of the technology space, have benefited to a great deal in this. And I think that combination has what sort of created this schism of looking like a robust stock market propelled by, larger entities, many sort of with sort of a tech flavor to them, benefiting from sort of lower rates and the like. And the recovery, and I'd say beyond all of that, the recovery itself, frankly, probably feeling a little bit better at this point than we all might have thought. So still a fair bit of uncertainty to date. Be interesting to see what lies ahead.
So let me just take off on one of the points that you mentioned, obviously, and that's been extensively debated within India as well, that India's fiscal response has been very limited so far. The direct fiscal response has been very limited so far. There's been a lot of stuff about providing credit guarantees and stuff like that, which is actually quite large. And, India's own version of Operation Twist, which the Indian Central Bank has been conducting. So you could So there has been a large response in that sense. But the fiscal response is very limited. And one of the reasons for that is that the Indian government appears to be extraordinarily worried about about what rating agencies would say. It has an investment grade rating, but it's at the lower rung, so it can slip off the rating very quickly. And as you also mentioned that we don't have the US can eventually print currency, so can the European Union. India can't. So would you say that the Indian government is right to be worried that an emerging market will be treated more stringently by the global markets if it goes in for an extravagant fiscal response as compared to markets such as markets in more developed countries? Is that fear justified, and what are your views?
Well, I think, it's one of the more interesting debates. I think in the spring, there was a lot of discussion about whether India could, quote, afford a more dramatic fiscal response. And I think, as you allude to, it took the path of deciding that it wasn't necessary. Although I would say it did clearly happen in some places. There were certain amounts of rural income support that happened. I do think the more significant way it dealt with it, as you allude to, is it essentially offloaded responsibility in some ways into the banking system, and then provided meaningful monetary support through the RBI and the like, through moratoriums and the like. And that obviously just recently ended, and we'll see how it plays. But I would actually say it played better than I might have thought in the beginning. That it has essentially used that mechanism to have managed through, and that now what we're seeing across a pretty wide variety of businesses that we have exposure to is the recovery coming on the back of the release of restrictions themselves, and that propelling growth. Now, the longer run answer none of us yet know is, so do you get the snap back to 90%, and how do you get that last bit? And more importantly, how can India restore itself to a growth path? I mean, the story for India is all about growth, and I think it's too early to yet speculate. But I would say that the responses to date, though I think there's an active debate within India on this topic, have probably played better than I would have thought. And I do think there's a recognition, not just in India, I kind of alluded to this earlier, that one of the gaps or splits that sort of will become apparent over time are those countries that are capable of issuing debt in their own currency. I don't want to say in unlimited amounts, but in relatively unlimited amounts. And that will be a challenge, not just for India, but I think it'll frankly be a bigger challenge for lots of other emerging markets around the world. So I think that is something that is an appropriate dimension for India to have to consider. But, all things said, I think its response has been, again, has been reasonably well managed. But I think we're sort of right at the moment in time where we'll begin to see, as sort of the normalization in credit markets takes place, and as the healthcare dimensions of this still continue to play, how India can address what is kind of the more important, medium and long run issue, which is all about growth.
So we are in the midst of an extraordinary, it appears so to be in the midst of an extraordinary decoupling of the world economy, basically between the US and China. How do you see this playing out? And is this a good thing or a bad thing?
Well, look, I think one of the more, clearly one of the most dramatic stories of the last several decades has been the growth of emerging markets, the rise of the rest, the growth that's taken place outside of, US, Europe, Japan, and China has been at the forefront of that. And now we're in a place where, history has long talked about the conflicts that arise between status powers and rising powers, and the Thucydides trap, as it was referred to in Graham Allison's book. And I think the thing that worries me most about that dynamic at the moment are people who would simply think that somehow that buy into what I'll call the China collapse theory, that it's all somehow about to unravel. I think instead what we all need to be focused on is how to manage through in an environment in which it's successful. What are its strategic ambitions, and how can those be accommodated? For all the talk of decoupling, the economic linkages are still quite meaningful, and I would say have actually grown. And so I think it's a very difficult, complicated issue. I do think it's going to be, if you sort of lined up the world and look at geopolitics, it's going to be one of the more, maybe the most meaningful question to be answered in all of this. And as you allude to, India itself has a distinct, place in the world and role in it. That said, I would also say that I've always felt like the India story itself at its core is more about India itself, and that its challenges and that its opportunities are more domestic in nature. And while, of course, it worries what neighborhood it is and it worries about, you think about geopolitics, I think the more important and significant questions about India are unto itself. And that domestic content, those domestic questions to me are in some ways the more interesting to discuss.
So to come to India, so the discussion, which you alluded to 5 years back, I mean, there was a reference to India's Fabian socialist background. In some ways, it was the original Fabian socialist experiment, and which kind of held the field till 1991. So in that context, this administration has sort of prided itself on an improvement in the World Bank ranking of the ease of doing business, which has happened over the last 5 years. But you have invested in you're present in a wide range of sectors in India. Where do you think it has gotten easier to do business in India over the last 5-6 years, or has it, or are things, or is India still a very difficult place to do business?
I'd answer the question a couple of ways. So one, if I look back, I think I first started traveling to India with some regularity back in 1995, and we made our first investments there. And if I sort of think back in my mind to India at that moment in time and compare it to today, it's remarkable. I think not just as investors or foreign investors, but in terms of domestic interest as well. So I think that still remains India's principal challenge, is sort of completing the reform vision that I think underneath it all, the principal challenge, as I alluded to, is it's all about growth. India has all the powerful tailwinds of demography and so much else, but that's not destiny. It's not foreordained, and it requires continued vigilance and significant action to continue to take advantage of that opportunity. There's no doubt it's there. It's why we've been a significant investor there for 25 years and have done well, and I think can be seen as an example of success. And we love to talk about that and tout it, but the challenges still remain, and I think those are the big open questions for India.
Charles, just wanted to go back. You've obviously seen the Indian ecosystem for a quarter of a century with those investments in Bharti and Ambuja Cement and so on, Kotak Bank also. So I just wanted to has the Indian entrepreneurial pool, as we sit now in September 2020, is the quality and the depth and the width of that pool better than it was when you started out?
Yeah, I'd say it's probably the thing I think that has changed most dramatically. I think in when first there, the opportunity to become an entrepreneur was something people would have associated with access to privilege to permission or privilege to capital or whatever it may be. And I think one of the things that's changed dramatically, and I like to think that private equity, not just our firm, but others have played a role in it, has been to enhance the opportunity set for entrepreneurs. The role of professional entrepreneurs today, people that don't come from something but decide to go become entrepreneurs and create things from nothing. I think for me and my colleagues, one of the most remarkable things that still jazzes all of us is the chance to find those talented people and provide the risk equity capital that fulfills their dreams and ambitions. So I think it's changed quite dramatically. There are people we've backed multiple times. I'd say the other thing that's now happened is we're seeing generational change. So one of the other areas that we've been very active in going back to our first investment, obviously at HDFC, and a long relationship with Deepak and others in the space, and Uday at Kotak. Now we're seeing another generation of players, and, we're invested. We've never not been invested in financial services over the 25 years. It's probably the sector we've been, because we've seen it as a direct corollary to the Indian growth story in sort of an accelerated way. And, as the industry has changed and evolved, and you've seen players grow not just in banks, but in NBFCs around varying categories, varying sectors and the like, the talent that in many cases we knew in earlier portions of the career have now grown into entrepreneurs or CEOs of things that we've backed. So in a space like that, where our roots are deep, it's been, we've seen it most dramatically. But I think it is the thing to me that has, changed the most in India over the years, has been not just the pool of entrepreneurs, but in some ways it's been the which I view it, kind of the entrepreneurial dreams that you see in so many young people. That's clearly a source of opportunity for us, but it should be a source of optimism for India.
I can ask you, of your existing investments, which do you see as becoming the next Airtel, or the next Kotak, or the next HDFC?
I mean, if only I knew that. I'd like to think they all are. I don't think we do anything not thinking that it's not going to be, a dramatic opportunity. Look, I mean, the things like that sort of, change the landscape are only happen rarely across life. But, I think there's a number of things in the portfolio at the moment that we have a lot of keen interest in. And, as I said, I mean, I look today, we're invested pretty comprehensively across the financial services space, from really having created IDFC Bank through the combination of our capital first with IDFC to create what could be one of the next sizable institutions in collaboration with Vaidyanathan. But whether it AU Finance or India First or Avance or across the stack of what we've done in financial services has always been an interesting space to be in for us. But there are also some things we've done more recently that we have pretty high ambitions for.
The first 5 billion India took a quarter of a century. How long would the next 5 billion take? How many years would the next 5 billion take?
Oh, I don't know. It wouldn't surprise me if it were 5 or less. As I said, I think, I've never, as I started by saying, I've always had a deep appreciation for what we don't know. What that means is that you have to be prepared for opportunity as it comes. And so our capacity to invest in India is substantial. But I think where you can get yourself into trouble is sort of in places where you become more quota driven or allocation driven as opposed to opportunity driven. And so, our business, if I think about the size and scale of today, it's not what I would have imagined when we started 25 years ago, not just true of India, but true of the firm more broadly. When Warburg Pincus was started in 1966, I mean, the institution goes back more than 50 years. I'll never forget as a young person at the firm, Lionel Pincus and John Vogelstein were its founders, talking about how we, raised its first fund in 1971 at $40 million and thinking that was all the money in the world. And the size and scale of change is what I think, if I look back even during my own, 35 years at Warburg, has changed most dramatically. And so I think it's hard to imagine what scale in the future may be. We've got an extraordinarily talented group of people with India, a remarkable ecosystem of entrepreneurs we've done business with. India is going through, as we've talked about, a fair bit of change and disruption at the moment. And, what comes next is unclear and uncertain. But what's apparent to me is that it will create opportunity for people like us that are prepared to provide real risk equity capital that either, helps fix, strained balance sheets, that sort of worked through generational change that's also within even large Indian business become a topic of conversation as well as continues to, back and support the next generation of talent. So, if India's fundamental challenge, I think it's all growth, as I've said. How does India grow? I think private equity in our industry has a role to play as a catalyst for that opportunity, and certainly we intend to be an important part of it.
Okay, I'm being asked to wind up. So thank you so much for doing this. Thank you so much for taking time off. And I know you've talked to our paper a number of times. So thank you once again. Look forward to, I don't know when that will be possible, but look forward to seeing you in India whenever, international travel becomes, more possible than it is now.
Well, thank you for the opportunity to join. I do think this has now probably been the longest time in 35 years I haven't been there. So I'm anxious to do so and look forward to seeing you then. Thank you.
Thank you. Thank you so much.